All right. Hello again, everybody. Thank you all for tuning into another amazing episode of Tales from the Pantheon. My name is Gabriel Rucker. I am the CEO and co founder of Titan AI and also the host of this amazing podcast, Tales from the Pantheon. For those of you all who don't know what Tales from the Pantheon is, it's basically our no BS amazing stories podcast where we talk with founders, investors, industry experts, community leaders, really to get tangible information around their stories, their journeys, and ways to apply them into professional networking, community building, investing, all of the fun and favorite topics that we love. And also, just as a quick update and information, so I will be camera off for this one because my laptop still hates me. But hopefully, you'll be able to see my amazing face again here soon. But also to give some context for what Titan AI is. So, Titan AI is a community focused relationship optimization platform, really just a personal CRM mixed with social hybrid that helps our users with, finding the right connections, but also maintaining them as well. And making sure that really they're getting the best use out of their networks and making sure that we're continuing to grow and innovate. So, as I've said before, our V2 is live. Please go ahead and sign up on our platform, Titan.ai, and we'd be happy to have you. If you have any questions, concerns, if you see any bugs, please let me know because we are in the open beta stage of everything. We actually just pushed out some amazing updates today as well. So would love to have you guys see some of all the different analytics and demographic information that we've added. Along with, you guys can now see our change log. So please make sure that we get your feedback on it. Would love to hear any thoughts or potential future feature updates. But I also want to make sure that I bring on my co-founder Brandy really fast. She does have her camera on and it is working. So Brandy, if you want to go ahead and say hi to the people and tell them a little bit about who you are before we get into the rest of everything.
Hey y'all, thanks for joining. I am the COO and co-founder of Titan AI. Like you said, we are live, so feel free to jump in. You can find either Gabe or I on LinkedIn and reach out to us if you do have any questions or if you're interested in setting up a call. Happy to explore any type of a conversation, whether they be a partnership, a customer, or just somebody that's a community builder and super interested in what we're building. Yeah, that's pretty much what I got for today.
Perfect. Thank you so much, Brandy. And Brandy's going to be in the chat monitoring things. If you guys do have any questions, please post them in the chat. We'd be happy to, bring up some of those in conversation when it fits in. But Brandy's going to be off screen as we bring on our amazing and esteemed guest. I am excited to have her on. I've been trying to coordinate everything for a minute, so I'm really, really excited for this conversation. So I want to bring Brandy off screen and bring on the amazing Khadijah Robinson. How are you doing today?
I'm good. How are you?
Doing amazing. Doing all right. Doing all right. And so, since I'm camera off, you are going to be the opposite. So, even more the star of the show here. So, I want to make sure that you were front and center so we can get all of the amazing knowledge and tidbits. And so, yeah, I would love for you to tell everybody a little bit about yourself, your story, and then we can jump into the rest of the setup.
All right. So, my name is Khadijah Robinson. I am based in Atlanta, Georgia. I'm originally from Savannah, Georgia. So, I'm a Georgia girl and a Spelmanite. Huge supporter of HBCUs as well, all across the board. I started my career as a lawyer, hated that. Started a tech company while I was still practicing law, which I sold and built another tech company that I exited in 2023. I was dibbling and dabbling with investments at that point. I invested into a venture fund based out of the Midwest, and that kind of got my juices turning, flowing, and wheels turning to venture out and really focus more on investments in the venture capital and startup space. So I, alongside my partner, Dr. Brom Rhodes, started a venture fund last year called Fictive Ventures. We are raising a $5 million venture fund that invests into Black led tech companies across the country in the US. industry agnostic, focused though on companies that we believe are creating a new product or creating a new market with their product or expanding an existing market, and that have some level of positive impact or externalities on the communities that they interface with. And we are also raising from an entirely Black bench of limited partners or investors into our fund. And to my knowledge, will be the first venture fund to have all Black LPs. We are creating new limited partners and new investors as we raise this fund. So about 60% of our investors have never invested in venture or startups before. Our
Wow.
goal is to teach more people about venture capital, to make this an accessible asset class for more of us to invest in and build wealth in, use as a part of our entire wealth strategy and portfolio. So we have a pretty low minimum check size for venture capital, and we do a lot of educational events around different aspects of investing as an angel, investing into a venture fund and venture capital in general, so that we can really hopefully catalyze and train that next generation of investors. So I do a lot of that. Otherwise, I do a lot of entrepreneurial support work. I run an incubator with the Center for Black Entrepreneurship here in Atlanta, focused on helping to bring more Black-led startups in Atlanta to investor readiness. I also work with Black Ambition as their entrepreneur in residence, supporting their founders, mentoring and advising. And I generally just do a lot of Black stuff. I love my people, and I'm an aunt, which is my favorite job. I talk to my
Love
niece
that.
every day. I recently taught her how to say stinky butt. She's 2, so she now runs around saying stinky butt all the time, which is so cute. So yeah, that's me.
No, I love that. I was just recently on North Carolina with my niece, and she just turned 5 years old, and she was giggling at the word "ugly witch" for probably about 5 days straight. So, like, because she thought that ugly was a well, it is a bad word for 5 year olds, but she was very much having the time of her life. But no, we actually met down during South by Southwest last year, where speaking of all of the ecosystem and Black things, yeah, I know you noticed a big gap inside of the programming last year for Black founders and investors and supporters of all things underrepresented. And so you put together an event basically last minute, and we're trying to get a lot of people in the room, and ended up being a really big hit. I still have a lot of those connections from that event. I know we were talking about you potentially doing that again this upcoming setup. So if you have any amazing updates on that, we'd love to hear it. And we can jump into some other things, but I wanted to make sure we highlighted that at the beginning for those that are tuning in and might not watch the full thing. So go ahead. Do you have any updates
Yeah,
on?
I hosted, yeah, just like you said, last year when I got to South by Southwest, I noticed there was a distinct difference between, previous years and what I saw in terms of programming that was focused on Black founders, focused on Black investors last year. And it just felt in general like a reflection of everything that's happening across the country with our anti-DEI and all the rollbacks and pushbacks on all things Black. It's like being
Yeah.
like, Black is a bad word apparently now. And so um, I decided to do something very impromptu. Like you said, just got a bunch of folks together, and it was a great event and really great for connectivity amongst the community. And
Yeah.
so we actually did a part 2 at Afrotech this past year in Houston, which was also a fantastic event. We hosted it at Black Owned Bookshop in Houston in partnership with several different organizations. And it does look like we're going to bring back the Black Founders and Funders event. It's going to be part 3 again at South by Southwest. We are finalizing details. I will be sharing those on my newsletter, my personal newsletter at djadonija.com. I'll be sharing it at Fictive Ventures newsletter as well, our pages, my LinkedIn, all those channels, so that everybody can tap in. And anyone who has been to any of our previous Fictive Ventures events will get information about that. And we'd be happy to host folks and share. But the whole goal is connectivity amongst the ecosystem. And this year, we are actually launching a tool at that event specifically for connecting Black entrepreneurs and Black investors. So this will be focused on making capital connections for entrepreneurs that are out fundraising to Black investors across the country. We are really excited about that tool that we will be launching. People will hear a lot more about it at that event. It will take place during that weekend of South by, sometime between March 13th and 15th. We are finalizing date and venue now. So please stay tuned for that. And also just stay tuned on the tool that we're launching, because the goal there is to take those in real life connections that happen and bring them online and hopefully deepen them and really expand our focus on how we make sure that money is actually flowing amongst us, which is key.
100%. And I mean, that was another reason why I wanted to bring up the South by Southwest event, to kind of highlight that tool. I mean, with Titan AI, back in the day we were founding Titans, that was our initial goal, was to help underrepresented founders with founder and investor connections, right? Both on the not only the founders seeking funding, but also like the GPs and LPs and all the fun things. We have since, pivoted and updated things, but there is still a gap there that we all know needs to be addressed. And our technology does help out with a lot of those things, but it's also great to have really pointed tools as well, specifically around those aspects, because we all know about the numbers for underrepresented founders. We don't got to go crazy into repeating the metrics, because we all know whether it's silent or out loud for all of those things. And so I'm really excited the fact that, you and a lot of other people in the ecosystem are really pushing the track forward, especially as we're talking about this towards the end of Black History Month, to, really spotlight some of those programs. But let's get into, some of your founder and operator background. So you have been a lawyer, as well as, you've run multiple companies, you've had an exit, all of those great things, which is, the founder and operator background, diving into venture is always an appreciated one. And so really want to dive into how those experiences shaped the support that you give entrepreneurs today.
Oh, honestly, how does it shape the support that I give entrepreneurs today? It forms the basis of everything. I don't know how people are investors and like give advice to entrepreneurs and they've never done this. It is a singular experience to build something from nothing as a founder, to take the vision from your head and bring it into the real world and create something that will impact how other people live their lives. And so it's the hardest thing that I have done. Although I will say raising one has not been easy, but being a startup founder, it is so hard. You will cry, you will gain weight or lose weight, you will be depressed at some point, definitely have anxiety, you'll lose money, most likely. It'll impact your relationships, it can impact everything. And so
Yeah.
being in a position to understand that mental space, understand that grind, understand the challenges, and be able to support founders through that is key. And not just support founders through that, but also like kind of cut through some of the delusion that we tell ourselves as founders, because I think there can be a disconnect when an investor is talking to a founder and they're like, why is this the founder not absorbing what I'm telling them about this thing? But when you have been in that space and you know what it's like to feel like it's you against the world, and you've got to like carry this thing on your back and nobody gets it and nobody's with you shooting in the gym kind of thing,
Yep.
then I think it's much easier to understand the mindset and be able to have some like real talk, like, listen, what you're doing now is not only not working right now, it's never going to work. Do you
Yeah.
want to go bankrupt trying to do this, or do you want to pivot? Like
Yeah.
let's cut through, because I know that you're thinking, if I can make this happen, then maybe this happen. I'm like, nah, let's get it, let's get on track. So
Yeah.
just having the ability to kind of suss out some of that mindset that founders can get into that can be a little bit self-sabotaging, I think is huge as well. And having some compassion and also just respect for founders, what they do, and their time. I do think
Yeah.
that there is an imbalance in the way that many investors approach this work. Like, we are the prize, the founders are seeking us, they want the money. And really, the founders that we want to invest in, like, they are the prize. They're the ones that make this whole thing go round. So being respectful of their time, respectful of their work, and treating everybody as if they are, as important as they really are to this whole ecosystem is key. Yeah. I don't
Yeah.
know what else.
No, I 100% agree, and I think it's interesting when you were talking about the mindset of founders, right? And I think a lot of, especially first time founders, have a lot of preconceived notions on how this game works and how to operate in it. Like I was just talking to a founder yesterday, specifically around like, ah man, I might have to get a day job to do everything, but I don't want to, whatever it is. I'm like, okay, let's look at the options, guys. We want to be homeless, or do we want to, like, you can still run the business and everything else, but it's like not putting yourself in a bad position and making sure that you're evaluating what, you know, there, of course, you want to move with the fastest you can, but I think also being practical with some of the assumptions that, you have, especially when you're looking for capital, when you're looking for customers, all those different aspects, right? And that's kind of segues into my next question of, what are some of the biggest operational lessons you've learned when you were scaling your companies as a founder, and even some things that you might have underestimated or other founders tend to underestimate when going through those processes.
So operational lessons. I do a good amount of work as an interim or fractional COO with startup founders across the country. And between that and the things that I learned in my own companies, say not being overly focused on like structure and efficiency and optimizing and processes too soon. And that might sound counterintuitive coming from somebody who has been a COO, but when you're super early stage, your processes are going to change all the time. What you did last
Yeah.
week might not even be applicable to this week when you learn something new and you react to that and you pivot. So
Yeah.
being overly focused on like putting together a process and a SOP and all of this structure is probably not the best use of your time at the very early stage. However, you have to know when that time comes, because once you hit the tipping point, if you then don't get some structure and processes in place, then you're going to handicap your own growth, because things are going to start breaking as you're growing, and you're not even going to remember or know exactly how to triage and fix things. You're going to have something limiting your email inbox instead of in like your organized storage that you're looking for. You can't remember. You didn't do this. You didn't dot this I on this process. All sorts of things. So
Yeah.
that is one lesson, like not over optimizing too early, but knowing when to get that structure in place. And it's usually when you have done the same thing a few times and it works, and you're going to have to keep doing it in the future. Yeah, so you want to make sure that you have a process in place to facilitate making that a seamless.
Yeah.
Then other operational things, ops are changing a lot right now with AI. So a whole hiring strategy might be different. You might be in a situation where you can operate much more leanly for a much longer period of time based on the tools that you're able to leverage, but still the biggest thing is to not make yourself the bottleneck, and to from the beginning be thinking about how you build something that does not solely depend on you. I tell founders all the
Yeah.
time, if you are building something and in everything stops and everything falls apart the moment that you step away, then that's your job. It's
Mhm.
not necessarily a business, it's a job that you've created for yourself around you. And the only sellable asset that you likely have in that is yourself. So,
Yeah.
if your goal is to have something that you exit in the future, you've got to make sure that it can operate when you go on vacation or when you get sick or whatever. So, being very thoughtful about, even if you're leveraging different tools to support you as opposed to bringing in staff or headcount team, being very thoughtful about how you structure the business itself, not just thinking about the product, but structure the business itself so that it doesn't solely rely on you. And then I'll actually like really thinking as um, heavily about the structure of the business itself as you do about the product, because the business will kill you before the product. It's like
Yeah.
the product. There's been plenty of products that have been kind of so, and the business of it is what makes things go round. And my favorite example of that is the platform. And I don't know if I'm allowed to call out names and big corporations or whatnot, but the
I
platform
mean,
I
on this
hate
one,
the
I mean, it's up to
most.
you.
I
I
hate
was
the
like,
most with all my heart is Microsoft Teams. It is the
mm,
worst thing I have ever used on Al Gore's internet in my whole life. And the reason why Microsoft Teams is so popular is not because of the product. The product is
yeah.
trash. It's horrible.
Mhm.
It is because of the entire business of Microsoft that has shoehorned and forced Microsoft Teams down the throats of millions of customers. So like
Mhm.
the
Yep.
business makes the whole thing go round. The product is absolutely garbage.
Yeah, I mean, you see a lot of that stuff in a lot of different spaces and industries where, the product isn't necessarily the end all be all, right? And I think actually during a boot camp I just ran last week for idea stage founders, we talked about what investors are really looking for in terms of actually making a deal, right? And only about less than 10% of what you're building is the product, right? It's like, what is the team? What's the market? What does your traction look like? All of these other aspects. It's not just, I think a lot of founders get hung up on the product portion because they want to make things perfect. I've talked to a lot of founders where I'm like, hey, just put something out. Even for us, like we've been in alpha for all of last year, putting out little tidbits and things, getting feedback on the startup side for us before we launched our open beta. And yeah, that alpha stuff was absolute garbage, right? But we got the usage, we got the data, we got the the metrics, and even it presents good opportunities for founders that are building new innovative solutions because you can improve upon those things, but it doesn't have to be the final product right out the gate. And I think that's what a lot of people need to realize as they're going through things. And I know you mentioned Microsoft Teams. I have experienced one way worse. I don't know if you ever used Chime, but that is my bottom of the barrel is Chime with Amazon, and then it goes Microsoft Teams, and then from there things kind of trend upwards. But yeah, no, I can't with I used to use that when I worked at Amazon, and it was the atrocious. But
I have
I
not
wanted,
used Chime, but lawyer me has used WebEx, and I will like
ooh,
I'll take your Chime and I'll one up you WebEx.
mm, I'm so sorry you had to go through that experience. I've used WebEx, I think like twice in my entire life because I also used to do system integrations for like companies. I had to build
Uh,
out a WebEx for one of my consulting projects, and I was
oh
like, why are we
god,
doing this? There's so
it's
many
awful.
better things in life.
But one thing I do want to say on the point that you made earlier, and I think that goes back to founder mindset.
Mhm.
I found that the in my view, a lot of times the reason why founders are so focused on the product is because that's what they can control. It feels like the business outside of the product, and the other things that make the business viable and go round are, it feels almost uncontrollable. Like, where to find investors, getting early customers and making sales, building that sales flywheel or that growth flywheel, finding product market fit, and honing in on the ICP, and all of these things seem much more outside of the control of the founder than, I'm going to move this button right here and I'm going to
Yeah.
build this feature into the product that does this, and then the customers will come. And that feels safer than I have to go out and find those customers. So I do think a lot of it is, for lack of a better phrase, fear based.
Mhm. Yeah, and I mean, I completely agree on that aspect as well. And I think like a lot of founders equate like A/B testing their product to actually getting traction or anything else, but like your go-to-market strategy is one of the most crucial points, in my opinion, because I mean, you can build the absolute worst products. Like, hell, I was going through some of our competitors' applications yesterday, and I'm like, oh, our stuff is actually a lot better than what like I thought it was this end all be all amazing thing when I tested some of the stuff a year ago, and I'm looking at it now, I'm like, oh, this is still kind of trash. Like, we didn't need to do maybe some of these things to put it out. We could have just left this the way it was. But you know, it's all good for building things out. But it's just like I think people get tunnel vision in that aspect, and they kind of just like, oh, these 5 users are complaining about this thing not working, and it's like, okay, but maybe that's hopefully 5 people out of like thousands, right? And so it's like maybe everybody's experiencing this, maybe they're not, but you still have to keep the ball moving, and you can't just stop selling or stop drawing people in, just because you want to make it look pretty or nice, right? I think that's the biggest thing. But I do want to jump into more about the fund and fundraising, right? So specifically around, because we do have a lot of investors that watch this as well, so I want to give them some tangible feedback, and not and the founders can use this information too to kind of understand the landscape, or people that are outside of the ecosystem. But how does raising a fund differ from raising capital as a founder, and what the fundraising process has kind of been like for you right now?
So, when you're raising a fund, you are selling your ability to find the best companies and the best deals,
Mhm.
and to gain access to those and be able to invest at the right time in order to generate returns for your investors. When you're building a startup and you're fundraising for that, you are selling your ability to take this product and this business and grow it. And that feels a lot different than fundraising for the fund. So with the with fundraising for this a startup, when I was fundraising for my last startup, uh, track record didn't come into the conversation necessarily when I was
Mhm.
raising from investors. It wasn't like, show us where you've built a company just like this so that we can feel confident that you can do this one. And I was
Yeah.
like, that didn't really come up. But when I'm fundraising for the fund, track record is thing. Like, what other investments have you made? Have those investments panned out? Um, and tell us more about access to deal flow. Tell us more about how you plan to support these companies. What kind of platform are you going to build in order to um, offer portfolio support? So
Mhm.
that is, it's a little bit different. And I feel like, and I may be wrong, and other investors might have a different opinion, but I feel like right now I am in a relationship business where my success is extremely, extremely dependent on the relationships that we make in order to raise the fund, and the relationships that we make in order to find the deals that are really going to return the fund.
Yeah.
And when I was building my startups, yes, it is always, uh, very heavily swayed by relationships. A lot of it is being able to like really buckle down and build a business.
Yeah.
And so that just felt a lot different. Not to mention, we started fundraising for this fund in 2025, which was two thumbs down in terms of the market and
Oh yeah.
everything that was happening when it came to fundraising. So my fundraising experience in 2021 was completely different than my fundraising experience in 2025, raising the fund. Things feel a lot different this year already. And I
Yeah.
don't know if that's because, well, I'm not going to say I don't know if it's because the market has changed. The market has definitely changed. I think the market has changed not necessarily because any of our macro level factors of the economic environment or the society that we live in have actually changed. I think it's just that we've all gotten used to living in a new circle of hell. And so we are like, it's not that hot. Okay, let's just roll, put on our swimsuits and like figure it out. So
Yeah.
people are kind of getting used to the chaos and
Mm.
opening up their wallet, starting to deploy capital again. So
Yeah.
things do feel different. And the pace at which I'm seeing deals happen and money move is definitely different than it was even 6 months ago.
100%. I mean, as I was talking to a lot of LPs over the last couple of months, and even just early last year, 2024 and stuff too, you know, a lot of the uncertainty around the market definitely has fueled a lot of, decisions and investing in new and emerging funds. There were also during that, 2020 through say like 2022 phase where there was that boom of, everybody's tossing out money, everybody's getting their funds, filled out and everything. Because of the basically the AI, boom or bubble, however you want to categorize it. So it's definitely a huge factor where everybody has kind of been holding their money a little bit more, trying to see, okay, when are things gonna calm down? I think everybody's just kind of accepted that over the next 3 years, quote unquote, we are gonna have this
There's
market
no
uncertainty either way, and portfolios still gotta exist. So we still gotta make sure we're growing our wealth. So it's the conversations are definitely shifting in a more positive direction. And I think a lot of the poor actors when it came to funds that were created during that beginning of the decade that have kind of fizzled out and just weren't or are not going to be able to raise their fund two or three, have kind of appropriately died off where they need to. And now it's like, okay, there is the opportunity still budding now for people that are doing the right things, or people that do have a pulse on different markets, kind of like you're doing with Fictive Ventures, and being able to get not only spark capital for the founders, but also for a lot of investors that typically might not have even known that this is an asset class for them, right? So it's definitely becoming a really interesting shift for sure. And there is, as you were talking about portfolio management and some of the things, so we do have a live chat for anybody that wants to post questions and everything. There was one here that I do want to highlight. If I can click on the button, there we go. Here where Phil asked, specifically that basically ways to facilitate intros to Fictive Ventures, right? On the founder side, but also I'll open this up as well for any investors that want to reach out or get in touch, what that process kind of looks like.
Yeah, so we take all of our deal flow through our website. Even people who are we're well connected with, who make warm introductions to us, we still take that through our website. We have a few reasons for that, but one of the things that we are trying to do is really ensure that we are opening up this space that we're creating with Fictive to our community as well as possible, and not making it a closed door relationship, only warm intro only sort of setup, but really facilitating building a community that operates in a way that acknowledges like that a lot of our founders just don't have that kind of connectivity and network. So we take all of our inbound through the website. Even the folks who make warm intros, we redirect them to the website. And then we have built out a process that allows our system to automatically gather additional data about the companies that are coming in through that web-based system once they put in an application on our website. So fictiveventures.com/for-founders, or just fictiveventures.com. They can easily navigate to our founders page, put in an application there. We focus on companies that are idea plus stage or pre-seed slash early seed stage.
Yeah.
When we say idea plus, we don't mean, back of a napkin. I had this idea last week and I think it would be a good one. Hey, y'all should give me some money.
Mhm.
But it's the idea, which should be a good one, an innovative one, plus validation points that indicate that this is the right founder for that company, that the founder has the ability to build a team to really scale this company, that there is a strong business case around this potential product and company. The market is actually viable and large enough to truly scale this company, and that there's really something there. And that validation can look different depending on the industry and the business, but
Yeah.
that is what we're looking for when we say idea plus. So we are happy to come in pre-product. We're happy to come in pre-revenue, etc. We'll invest in a solo entrepreneurs at that point, solo founders. But we are really expecting that there is very strong validation around the business if they are at that point. We're not investing in things that are, late stage seed or Series A and beyond, though we may be willing to share some of those opportunities with our investment community if the companies are willing to facilitate angel investment still at that point. But generally, we write $25,000 to $100,000 checks in the initial sense. So folks who are coming to us are usually looking for a first check, one of their first checks, and are at a stage where 50, 75K, even 25K might really, really be helpful to the growth of the company at that stage.
Of course. Yeah, and I think the biggest thing too, when you're looking at a fund run by previous operators or founders and all those things, there is that additional level of feedback and support that you typically don't get as much with some of the micro funds that do not have that. So I think there's a lot more opportunity there, for the actual founders and for the fund to really get down and dirty and be able to move past some of those early challenges that founders will face. Not that they may or may not. Everybody's going to face trials and tribulations. It just depends on the company, but in that regard, I would say nothing is necessarily unique. Somebody has probably seen it before, and if you haven't seen it, I know you have a vast network as well to where providing support for those founders to get access to some of those reference points so that they can find the solutions a little bit faster is always really important as well. The next thing I want to jump into is specifically around the ecosystem and specifically inclusion, right? So let's talk a little bit about some of the barriers when it comes to access to venture capital, right? So and we don't have to go too far down the rabbit hole on this because we've talked about this on other segments as well, but I really wanted to get your take on the best ways that you're thinking about closing the gap or like working with people in a lot of these other communities and organizations to kind of remove those barriers for underrepresented founders.
There's so much I could say here. First and foremost, I do not believe that venture capital is the best capital solution for the vast majority of entrepreneurs, particularly for Black and Brown entrepreneurs. The types of businesses that we are building, the mindset that we bring to our businesses, a lot of times, particularly folks who are looking to build something that they will continue to grow with and they look at as more legacy rather than I'm going to scale and sell type of thing. Like there are a lot of factors that I think make venture capital much less attractive to Black people. The thing is that venture capital is also in your face. Folks don't know where else to go to raise money and what other sources of capital they can tap into. They read and see a lot about venture capital, and they see a firm like ours, for example, where you can go on our website and put in an application, and that's much easier, it feels like, to access and try to tap into than all of the kind of gray relationship based. You got to know somebody who knows somebody, tap into this company that has an investment arm that writes $1 million checks and operates in a way that's different from a traditional venture capital fund type of thing. So I think a lot of our founders come to venture because it is more visible than other forms of capital in their particular ecosystems, even if it's not the best form of capital for them. That's number one. Number two, everything that we're doing with Fictive is like the goal is to open up more capital flows for our founders in different ways. And the underlying premise that we're creating more Black investors is in service of that. We want there to be more check writers who look like the founders that they are investing in, who understand the businesses that they're building, and the cultural relevance of those businesses, et cetera, who have different expectations than standard VC in Silicon Valley or wherever it might have, and that can be a part of the extended network and really the team for that company in a different way as they're building. So our LPs we look at as the extended network for not just the firm, but the founders that we're investing in. And when the founders need help, they have questions, they need a connection, we go straight to our LPs to help make that happen. We had our first LP update call of the year last night. And, as we were talking through some of we're putting together a deal. I'm supposed to be closing a deal this afternoon. So it's been a busy day. But we're putting together an SPV deal that's literally running right now. And we are, bringing in additional capital to come into that deal for that founder.
That's amazing.
We are bringing or have already made connections for clients for that company, customers for that company, and have really tried to help them really refine and focus in on some of their business modeling. So we really try to, like you said earlier, come in and serve as partners and for the founders in a general way. And that's what we want to model for our LPs, especially the new LPs, our new investors, so that they can take that and continue to build on that as they write more checks into more companies. So really, you're trying to build a community where we can go to other Black folks for investments, especially at that early stage, and not have to go and beg a venture fund that does not that might not understand the relevance or the importance of what it is that we're trying to build at that stage for capital. Honestly, really trying to create a new ecosystem of capital movement and Black innovation specifically.
Yeah, and I mean, as far as, some of these things go, I think another thing for that we don't talk about enough is the um, not reporting or underreporting, especially for some of the venture numbers, especially when you see a lot of these larger funds, because and a lot of founders don't know this, especially underrepresented founders. When you're looking at the statistics and everything, they are sometimes not as in line in the worst category, not the better category, because certain funds don't want to show how bad their numbers are for investing in women or investing in brown people or all these things. They just don't report at all. And so even recently, I was speaking with somebody about this. When you're looking at like online presences for founders, right? And it's like, okay, I don't know what round this founder is in. I don't know how much they've raised, who they've raised from, and so it's kind of a big thing. Just as a quick message to everybody, to make sure you do update those things, right? Like if you do have a lot of these, amazing funds that are supporting you, even if they won't report it or put it out, putting some of those things there, just so the visibility is apparent, right? And then I think also the biggest thing to piggyback off what you're saying for, uh, access is the fact that a lot of these, um, you know, investors and founders that are underrepresented don't really have the education around a lot of these things. And so going out and seeking a lot of that information, because I know there's like 64 different verticals of capital you can get, right? Only around like what, 6 of those are on the VC space. There is like CVC, traditional venture capital, institutional, all that stuff, and angel investing falling into some of those categories as well. But there are other options out there, and like there are grants. There are getting money directly from your customers, and then they're putting a direct investment in. So just really being a lot more scrappy in terms of finding the information to make sure they're better equipped, or listening to more content like this, right? But I want to jump into, because we only have a little bit of time left here. So I want to actually, we'll jump into the lightning round, because I feel like if I ask another one, we might go over. Want to respect your time. So for those of y'all that don't know or have not seen before, we have an amazing lightning round where we ask some more direct and rapid fire questions to kind of give some quick, tangible insights on things, right? So with going into those, you ready, Khadijah, for these questions?
I'm ready. You're from the Carolinas, so we ready.
Hey, ooh, I love it. Okay. I ain't heard that song in a minute, but that got me turning up. All right. So what is your favorite book or resource that you recommend to founders, and your favorite that you recommend to investors? And it could be the same.
For founders, Walk Away Wealthy. It's going to help them think from the very beginning, hopefully, very beginning or as early as possible, about exiting. For investors, I, you know, I honestly don't know. I might read. Actually, for investors, I will say read any book that is fiction. Get out of the nonfiction and go into the fiction. I think people don't read enough fiction these days, and they discount how much fiction allows us to really tap into um, the human, like psychology, storytelling, etc., and just build a better way of look understanding our world around us. That's not the like self-help 70,000 laws of power or whatever it else people are like reading all the time to try to figure out how they conquer the world. I think fiction is where we need to actually be focusing a lot more of our reading on. So I just started reading Kin by Tayari Jones, who's my Spelman sister. It's newly released, Oprah Book Club Book of the Month. I'm very excited about that, but I love fiction. I read a lot of fiction, far more fiction than nonfiction. And I think it's the most helpful for people who are in a relationship business.
Well, I need to add both of those to my reading list, just by the way, because I hadn't heard of the first one you mentioned either. So I definitely want to make sure I read those as well. So thank you for that. And let's go to the next question. So what's one trait you often see in founders who break through the noise early?
They don't be showing up to all these damn events. Like, they focus on the things that matter. And that is key. Going to random events with low ROI, random panels, just doing all the nonsense that distracts from building an actual business that scales is a huge indication to me. Like, people that do those things, that company is not necessarily going to go somewhere. So once I go to a certain number of ecosystem events and I see the same founder over and over and over again, or a cycle of pitch competition after pitch competition.
Ooh, did we lose you? Hopefully not. And I think we lost her for a second. Let me see if I can add her back in.
Yep, there we go.
Right, there we go. All right. Technical difficulties, it happens sometimes, but
but yeah, I'm like, when I see the people on the event circuit and there's very little with their product or their business or their growth and customers, that's a huge red flag. So the founders that are very singularly focused on the things that matter in terms of actually building a business, as opposed to the low ROI exposure type of things, are like the ones that I know are going to do well.
100%. And I think, and just to piggyback off of that really quick, if you're going out to these events, like you said, the low ROI stuff, right? Like, if you're going out to construction related events in your ecosystem and you're not building a construction company or whatever it is, like, it's the visibility for the right people in the right areas. I mean, even with the matchmaking tech we're working on, it's like being more intentional about your time, because you can't just going to events for going to events sake or trying to make sure that everybody knows you're out here. It doesn't actually convert to anything tangible, right? And so you got to make sure you're still moving the needle, because especially once you start putting your investor updates out and all these things, people are watching, right? So you got to make sure you're still continuing to move forward so that if you are trying to close a round, you can close it, right? And then the next question here is, what's a mistake that early stage founders make when they're approaching investors?
A lot of founders like to say they're the first or they're the only. No one's doing this. No one has ever, blah, blah, blah. And I think that they think that makes them sound like really unique and ahead of the curve and super exciting. But usually my brain goes to, well, why isn't anybody else doing this? Or why hasn't anyone else thought about this? Maybe it's actually not a good business, and that's why other people don't do it. That, or I automatically start thinking about other companies that I know that have done the exact same thing. And then I don't believe anything else that founder tells me, because they either don't know their own industry or they do know of their industry and they're willing to look me in my face and tell me a bold-faced lie.
Yeah.
So don't do that.
Yeah, no, 100%. What's one signal that makes you lean in immediately as an investor, or potentially on the ecosystem builder side? You can take it either way for this one.
I lean in immediately when a founder really knows their customer and has extensive information, data points, and validation that their target customer really wants what it is that they're building, the solution that they are building for that customer's problem. And the vast majority of founders have no idea. They do not know. They cannot describe their customer. They're like, we're targeting customers that are Black women ages 35 to 45. I'm like, what does that even, what does that mean? That's not a customer. That's just
the demographic data.
Segment.
Yeah.
That's a census line. So yeah.
What is so to piggyback off of that, I guess, what would be an example of a way that they could describe that? If, say, they were going after, like, when you're talking about metrics and data, like, what if there's a good example that you've seen that you can think of off the top of your head is like the antithesis of, we're targeting white men over the age of 45 kind of thing.
When people can tell me what books their customers read, what kind of drinks they like or they don't really like to drink, what kind of social settings they tend to find themselves in, what other things they like to do, and what other activities they participate in, why this particular issue is so specifically painful for this person, even though it might be, and it should be a problem that has broader applicability for this group of people, it's extremely painful and they are very motivated to actually do something different about it. Like when you can start really painting this story and not just painting a story that you pulled out of nowhere, but with actual data points, then I know that you've done a lot of that customer research. Because really, if you don't know that customer very well, you're not going to know where exactly to find them. Like you, if you said like you just mentioned white men over 45, and you're like, okay, for this product, we're going to go take it to the Equinox gym in New York
Mhm.
to try to beta test it. But actually, your customer segment, it more leans towards rural men, white men who are over the age of 45 and have a very strong interest in outdoor
Yeah.
activities. Then maybe they're not going to be an Equinox gym in New York City. So you're in the completely wrong place, even though there are white men over 45 there. But like, uh, you got to view your target customer as an actual person and not a segment, and be able to describe the traits and the personality and the motivations, the desires, the problems, and the issues of that person
Mm.
and go from there.
No, 100%. And we are almost out of time here. I do have more questions, but they're going to have to wait, or we're going to have to talk offline about them because, in the sake of time, can't get to everything. But I do want to highlight, how can everybody get in touch with you again? What are the best methods for both you and the fund?
So I'll start with the fun. Fictive Ventures at everything. Fictive Ventures on Instagram. Fictive Ventures on I still say Twitter because
Yeah, no,
I
same
don't
here.
be
You're good.
people. Fictive Ventures on Twitter, Fictive Ventures on LinkedIn, and then obviously
Mhm.
fictiveventures.com. If you want to refer any founders to us, or if you are a founder and you want to put in an application, if you're interested in learning more about how to join us as an LP, we are bringing in LPs with a minimum of $20,000 checks that we are calling over the course of the next 2 years. We've already started writing checks into entrepreneurs, into founders, so that's really exciting. And for me personally, if folks want to find me, they can find me obviously on LinkedIn. I do a lot of talking and interacting on LinkedIn, so I'm there all the time. But I also do have a personal website, DejaDon'tNeedya.com. That is a ode to the best, one of the best Khadijas to ever do it, Queen Latifah from Living Single, and her tagline in that show, which I love, and grew up looking at her as such an awesome Black woman to see on television. So, DJDon'tEG.com, I have a personal newsletter and website where I share all kinds of updates and things, and then I'm very heavily active on LinkedIn. So you can always find me there.
Love that, and I want to thank you so much for coming on today. I do have some other really quick taglines and updates before we close this out for everybody. As I've said before multiple times, you need to make sure that you're on Titan AI. If you are not and you're watching this podcast, I'm very upset with you. Please join. And also want to make sure that we highlight one of our amazing partners, Restream. So this is the platform we're using for actually recording this podcast. My video is not working because of Restream. It's because my computer is trash. Just want to let y'all know. So definitely make sure if you're doing any podcast segments or webinars or things like that, this is an amazing system. We do have over 20 other partners inside of our application, like QuickBooks. We've got Snapchat. We've got all kinds of people that we're partnered with. Notion for startups, for all of the startup founders out there. So definitely make your way into the platform, or you can check out our perks section. And then also, we are hosting an amazing event for Div Inc. I am a part of Div Inc. now as well, on top of the other things that I do in the ecosystem. So as part of us talking about Black content in, South by Southwest. Just us basically around capital, community, and culture, and making sure that there is a space for having a lot more of these conversations and facilitating a lot more of that networking. So if you're interested, please go ahead and scan that QR code, or I can always send you the direct link for Luma. But yeah, that's also, I'm still doing my Black Founder and Investor meetup. So on Saturday at 10 a.m., if you have an official South by Southwest badge, definitely please come out, and happy to have you guys. So yeah, thank you again, Khadijah. I really, really appreciate you for being on. I'm going to end this really fast, but if you want to stay on for a quick 1 to 2 minutes, I'd appreciate it.